Stop losing commercial loan deals you can't place. And if you've worked in commercial lending for any length of time, you've probably experienced something like this. And a qualified borrower walks through your door with a great project and solid experience and plenty of equity, but your institution just cannot finance it. And the deal isn't bad. It simply doesn't fit your bank's credit box. And unfortunately, many commercial loan opportunities will die for this exact reason every day. And the reality is simple. Banks have lending limits, while commercial mortgage brokers have more lending options. So if you're tired of watching good commercial loan opportunities disappear, it's time to think beyond a single institution. Every bank has a credit box, and banks are designed to lend within carefully defined guidelines, as they have capital requirements and a lot of other rules that they have to adhere to, which means they may avoid certain property types, and they may cap loan to value ratios, or they may not finance construction, or they may refuse hospitality projects, and they may avoid borrowers with unique ownership structures. And that doesn't mean the deal is bad. It simply means it isn't the right fit for that particular lender. And every lender has a specialty. And one of the biggest misconceptions in commercial lending is believing that all lenders finance every single asset class. And nothing could be further from the truth. So some lenders will specialize in multifamily apartments or hotels or self-storage facilities or industrial properties or retail centers or medical offices or mixed-use properties or office buildings or mobile home parks or manufactured housing communities. While others may focus just on SBA 7A, SBA 504, and bridge loans and construction financing and permanent loans, and CMBS, and agency lending, and debt funds, and credit unions, and life insurance companies. And knowing which lender wants which deal is where successful capital advisors separate themselves from the pack and from the traditional lending pool. So why commercial mortgage brokers win more deals? And commercial mortgage brokers don't have to rely on one single lending source. Instead, they match each transaction with the lender that actively wants that type of business. And that creates tremendous advantages. So you may stop hearing, well, our bank doesn't do hotels. Or you might hear, well, let's send this one to one of our hospitality lenders. Instead of, well, construction really just isn't our lending appetite right now. So you'll have multiple construction lenders competing is the point. And instead of, your leverage is just a little too high, another lender may have completely different risk tolerances. And this dramatically increases your approval odds. So CommLoan will expand your lending platform. And one of the biggest advantages becoming a capital advisor with CommLoan is access to an extensive commercial lending marketplace. And rather than relying on one institution, advisors gain access to hundreds of lending relationships covering nearly every commercial property type. So whether your client needs financing for, say, an apartment community, or hotel, or for self-storage, or retail centers, or industrial warehouses, or office buildings, or medical facilities, or mixed-use projects, or for construction, or for SBA financing, or bridge loans, or just simply a refinance, CommLoan helps connect qualified borrowers with the lenders that are actively seeking those opportunities. So instead of declining deals, you're creating solutions. And that's a little more fun, isn't it? More options means more closed loans. And commercial borrowers don't care whether one bank said no. They care whether someone can actually solve their financing problem. And that's why experienced capital advisors will consistently outperform traditional lending models. And the ability to compare multiple lending programs will often lead to better loan structures and higher leverage and lower rates when available, but faster closings and more approvals and happier clients. And here's the one that everybody likes: increased referral business. And the result is pretty simple: more funded loans, more repeat business, more revenue. So become the advisor that clients remember. And clients remember professionals who can solve their problems. They don't remember the guy who explained why they couldn't do the deal. When you have access to a nationwide commercial lending platform, you're no longer limited by one lending institution's policies. You become that go-to person who finds the solution. And that's exactly how successful commercial mortgage brokers build long-term relationships. Final thoughts for the day. In every year, thousands of commercial loan opportunities are lost, not because the borrower wasn't qualified, but because the financing source wasn't the right fit for that client. And with CommLoan's extensive lender network, capital advisors can access financing solutions across virtually every commercial asset class and loan structure, giving their clients more options and increasing the likelihood of successful closings. And if you've ever watched a great deal fall apart because your institution could not finance it, imagine how different your business could look with hundreds of lending options working for your clients instead of just one. So how many deals did you lose last year simply because your institution didn't offer the right loan program for that client? There's a thought. Please visit my website, billrapp.comloan.com. You can schedule a consultation so that way we can have a conversation. I appreciate you watching. Have a good day.